the things that we're trying to do. It's how do we achieve our mission as public community servants. And these are in priority order.
Things that
We
we're
basically
trying to
have
do.
four of
It's
them.
how do we achieve our mission as public community
Our number one
servants.
priority is to
And these
The third is to ensure a healthy and enriching environment for all Greenfield residents. So that's actually the things that we do and the programs that we provide. And then the
third
fourth
is to
and emergency medical services, best practice citywide infrastructure, and best practice safe housing solutions. Each of these I've got a little story about that. And in our past, we've had some issues with that. So we had to make it a priority to make sure that we're collecting money. The third objective is
I've got a little story about that.
in best practice form, offer a wide range of sports and recreation programs for youth and adults, offer a wide range of educational and cultural programs for youth and adults, pursue green initiatives that are sustainable and eco-friendly, provide a healthy, clean environment in which to live, provide community outreach effort to secure resources to help those in need. And the last one is our government structure. So we try to hire the best qualified employees, balanced with the desire to hire local and bilingual, to train our existing employees to be first-in-class service providers, follow best practices, personnel policies and procedures, increase and maintain transparency between all staff, leaders, and the public, implement best practices for all internal processes, put all assets, city assets to the highest and best use, and enhance our revenue sources. Streamline operations, reduce costs, reduce our legal liability exposure, which includes reducing costs, and develop best practice updates to the Greenfield General Plan and future strategies. So this is our overriding 4 principles of what we're doing and how we, up to this point, have broken them out. Everything we do points to these objectives and sub-objectives. It's not a perfect document. In fact, some of these probably cross over and I'm probably missing things. We're not going to talk about that so much today, but in the October workshop. So we hope that people who are interested in that come out and make it a good dialogue. Anybody have questions at this point? Ed, I cannot see if there's anybody on on Zoom. But will you let me know if we do? We have one? Oh, there's 3 right there. All right. Okay, do we have any hands up? Any questions? No? All right, cool. All right, I'm gonna move on. Brief history. So from what I can tell, and I've been here 5 years and I'm a finance professional, the finances generally good bookkeeping and good staff from what I know. I can see audits have been done. The cash position, which you'll see, I will touch on that on one of these slides, is in good position. It looks like the staff was a good custodian generally. And there's a couple of stories out there that I think I may have told related to some of the previous issues on how we either decided to collect revenues or not collect them. That isn't the best way to do it, but I think in the last 7 or so years, things have been fine. The problem was that the city didn't have much revenue. And so if you don't have much revenue, you can't provide that much service. And so that I think is the biggest issue that Greenfield has had, kind of breaking out of kind of a non-spending mentality. That started to change with the sales and use tax initiatives that were in the middle 2010s, with the arrival of cannabis. And you'll see how much money we've collected from them over the past, I think it's 4 or 5 years. With economic development, we do have Starbucks, we got Carl's Jr., we've got Taco Bell, we've got a variety of places that have come into town in the last 3 or 4 years that have thrown off sales taxes, and that's really good. And then tightening up on fees. One of our sub-objectives was to really follow the rules in collecting fees. We've had developer fees that twice in the past, prior to me being here, were written off. There's stories to them, and the stories, you say, oh, okay, I get it. It was really related to development that was going on in 2000 when the dot-com bubble was driving all prices up, and then there was a crash. Any development that was going on that got stopped and the city had not collected fees at that point in time, those just hung out there, and developers know what they're doing, and developers protect themselves in case something like that happens. If you hadn't collected the fees when at the beginning, I guess, you were out of luck. The same thing happened in 2008 in that downturn. There was a number of fees where development was going on. City of Greenfield was probably very, very happy that development was going on, but we didn't do a great job of making sure that we collected the fees in a timely manner. And when things went south and people left town and either abandoned their development or what have you, those fees went unpaid. And as you'll see, we've made it a point in our economic development and housing that we do not do that at all. We've got some developers that are not very happy with us because of that. But you'll see, we've collected almost $2 million in the last few years that was almost non-existent in previous years. Okay, I'm going to go on to the purpose of finance. And any questions on the the history, the objectives. Okay, nobody's so far. Okay, so that's good. Yes. Yeah, so that's I can address that very briefly. But that really is the economic development workshop. It has to do with, so small box stores, any business that comes into a town, a city, takes a look at the existing disposable income, as it were. How many people make enough money to buy the products that I'm selling? And if they take a look at it and say, well, you know what, it's going to be a tough row for me to make a profit because I don't think there's enough people buying enough goods of my goods. They won't take chances. They don't take unneeded chances. So that's why it might mean that. It might mean they have more disposable income per household, which just means they may, in general, make more money per household so that they can go out and buy discretionary goods, as it were. It may mean that. So what we hear from developers is that you need more rooftops, is what they call it. You need more residents. And I think part of what they really mean, and we happen to have our community development director here in the audience, is it may mean you need more rooftops with more disposable income, because we can't count on, you know, the 19,000 or whatever we've got here to have enough disposable income to spend it at our establishment to make a profit for the company. Anything to add to that, Paul, necessarily? Yeah. Yeah. No, no. Sure. Right. Mhm. Right. Right. Yes, Mr. Vasquez.
In the person you said, it's very important. One of these days, you make something in the newspaper, because mostly the people in Greenfield, we believe the city councils, and you don't do anything to bring this kind of stores to town. Explain why the stores don't come to the town, because the people believe you don't do anything. Yeah. Yeah. And you come in the newspaper, explain why the store don't come.
Right.
Because he believes you and the city council and planning commission don't do anything to come in the store here.
Okay. Well, so I'll be the first to say it's not really the planning commission or the city council. I
Yeah.
mean, they can go and ask people, but it's not, I mean, it's really staff's job to promote what we can promote and kind of make the economic drivers start turning. I mean, we do have a number of commercial businesses that are coming into town. And we certainly go through that when we do the economic development workshop. But we have to remember that anybody who decides to build a business here, they're going to do it because they believe it's a good place to make money. That's the point of it. And whether you like it or not, that's going to be the reason they do it. Can we entice them to help them? Yeah, we can. We certainly can. But at this point, we've got to kind of let it go the way it's going. I mean, Paul, and this is a different workshop for a different day, but so I hope that answers your question well enough, at least. Okay, the budget, of which I have a copy here, it's pretty thick. It's mandatory. It's mandated by state law that we have a budget. It's not necessarily mandated. It's a balanced budget. But normally it's good process to have a balanced budget, which basically means your revenues that you're projecting is the same as or greater than your expenditures. And when we talk about accounting, governmental accounting or public sector accounting is very similar to private industry accounting, with the exception that instead of having like one set of books that balances, you have basically multiple sets of books. You have different funds, and each fund does one of many things. And I'll get through that as soon as I get through the rest of this slide. But there are a couple of differences in looking at a city. The motive between the differences between private and public accounting is obviously for-profit businesses. Their objective is to make a profit. More revenues, less expenses, more money goes to the bottom line. That's a good thing. That's not what our objective is. Our objective is to provide services, and the best services that we can provide with the amount of money and as efficiently and as effectively as we can possibly do it. Also, so metrics basically for a for-profit, ROI, which is called return on investment, what that stands for, versus stewardship of assets. So our main objective is to make sure that we're using the public's money as wisely as possible. And then the idea of an appropriated budget versus a financial plan. A financial plan for a for-profit company can be changed willy-nilly. They can move money around. They can do all that stuff. Not so much with the city. Our budgets are appropriated. They're mandated by council. They're suggested by staff, and council has to appropriate the funds for specific things. That's the whole budgeting process. Whenever we want to make a change, there are small changes that moving things from one account, from one line item to another within the same department. We can do that on our own without council's approval. But if we wanted to move something from the police department to community development, that has to go through council, because council is the one that needs to know, and actually is the only one that can make those changes. Oh, look at that. Recreation, I said all that stuff. So, and so the purpose of the finance department is to come up with a budget, pay the bills, receive the revenues, balance the books, provide reporting, and assist other departments doing things like administering grants and also manage investments. In general, nonprofit is very much like for-profit. We have what we refer to as a balance sheet, which is where we keep track of all of our assets, like cash, accounts receivable, if we have any inventory, that kind of thing. All of our liabilities, like accounts payable or notes payable, and our fund balance. The basic equation in accounting is assets minus liabilities is your equity. It's basically how much you've got invested into your business. And then we have our income statement, which is our revenues and expenses. And that's normally what everybody wants to see. Let's see how much you're planning on on having in revenues and how much you're planning on having in expenses. We both have self-balancing sets of books. So what's different is we have over 40 sets of books or funds. Each are self-balancing and they have specific purposes. Each fund is defined and restricted in its use by a variety of factors, but normally by revenue source or expenditure restrictions, especially special revenue type funds, or by purpose, internal service, debt service, and internal service twice. So what that basically means is if we apply for a grant and we get it, we need to, the granting agency, whoever is giving us the money, tells us you can't spend this money on anything except X, Y, and Z. So that's what they call a special revenue. And we put it in its own separate fund. And we say, okay, this grant for 500,000, it goes in here. And then we come up with whatever expenses that qualify. We get the council to approve the acceptance of the grant along with the budget. And that's where that grant is accounted for, in that fund. Nothing else goes on in there. So let me just give you a, before we get into some of these actual numbers, I do want to show you a structure that people have asked about, a simplified way to look at our structure. And it can start out simple, but it just doesn't seem to ever end up simple. Okay, I'm gonna make this a little bit bigger. You see that? Okay, very small. Okay, well, not wanting to let me make this bigger. Okay, so let me just tell you what you've got here. Okay. So I'm not gonna see that on you. So basically what we've got is, we've got across the top, it says Fund 100, and it says 101 underneath. So this is a departmental spreadsheet that shows revenues on the top. And then all of these are expenses down the side. Let me get this to move. No, we have a look. And I know I'm making it look easy, right? Okay, so in this colored area, everything rolls up to basically expenditures for Fund 100. Now, this is not all of Fund 100. If we move over to the right, you're going to see some more actual funds, and we'll get into this and it'll be a little bit more clear in the next section. So this is Fund 102, which is our fire fund. We wanted to separate it. We set it up in a separate fund because 4 years ago, we didn't have a fire department, and we were contributing around $500,000 a year to the fire district, which is a different entity altogether. And the firefighters were underpaid, and they didn't have enough equipment, and they didn't have proper training. So the city decided that we would bring in the fire department, set up a fire department, bring in the existing fire district, and see that if we could help make things better. One of the things we wanted to do was make sure that we weren't overspending on the fire department, even though we knew that they were going to have, there's going to be some investment we had to do there. So we set them up in a separate in a separate fund. Yes. Yeah. Yeah, Measure C. That was just prior. It was kind of happening at the same time. Yes. It, well, it's funding the entire district, but the district is the same as it's always been. They're also paying for it. So it's not only Greenfield, but it's also other members within the district are paying the same assessment for their property to make sure that we've got enough money to help cover. Goes directly to, yeah, that's called, you can't see it here. You'll see it when we get into the nuts and bolts numbers. It's specifically for the fire department, goes directly into Fund 102. Yep. Yes. That's right. And that's kind of the same way we've always done it. It's just that we put more money into it. We were able to use and leverage some CDBG funds, Community Development Block Grant, which are federal funds that we actually were going to use for sidewalks, but they got redirected to buy the fire engine. So I don't believe that the district could have done that on their own. So we've done that. We've raised their salaries. We've got them more training. We're getting more and more equipment. So they're much better. They're much more well off than they were by themselves.
I think that part, they are definitely first in class.
Ah.
As you mentioned, that.
Yeah, if they're not, they're close. They're certainly, I mean, one thing that the mayor brought up in his State of the City address was that the whole valley, the whole peninsula is seeing the value of Chief Langford and his staff. He's been named the chair of the Emergency Medical Care Committee, which is a subcommittee, an advisory committee for Monterey County EMS. All right, so the point here is as we move over, we've got a whole bunch of other funds. And so we've got 40 plus funds. We have put them into a variety of like subtotals here, just so we can run some numbers. The idea though is for every column you've got here, it's a self-balancing set of books. And so we have to go through and every time we get money into one of them or spend money out of it, we need to make sure that it's budgetarily appropriate. We're not going over budget and that everything's being recorded the way it's supposed to be recorded. So it is like private accounting, very much so, except that we have 40 of them to do. All right. So now let's any questions? Anybody else? I want to get into some numbers. And the first numbers I'm going to look at are sorry, but it workshop.
Mr. Wood,
Yes.
I received a text that people have hands raised and they're not being called.
Oh, I just looked back there. I didn't see any hands raised.
I don't know.
Okay. Ed? Oh, they did? Okay. So can you, how do we call on them? I do that? Okay. So, I don't know. I don't see any. No, that's me raising my hand. Okay. Oh, there's one. Okay, Greenfield resident. If I just click on it. Okay. Great.
Yeah, sorry.
Oh,
I
very-
just want to comment that the comments that are brought up by the audience are not, I cannot hear all of them. They sound very far, or I cannot hear nothing of what they're saying.
Can you talk? Okay, thank you very much. I think we're going to test the microphone. Can you speak into that microphone? We have somebody speak into the microphone and let us know if you can hear it or not.
Yes, Sarah. Yeah. Hello,
So can you hear Mr. Vasquez?
Yes, but I think it's maybe then the audience person that needs to get closer to the mic so we can hear him all the way.
You know what?
Thank you.
Okay, so can you hear my voice?
Yes, that's perfect.
Okay, very good. I'll
Thank
ask,
you.
what that means is I will ask and answer the questions.
Okay, thanks.
Let's go to. Share screen. I apologize for this. I'm not a screen sharing guy. Okay, there we go. All right, so I'm going to leave it like that. I'm going to go down to cash. Okay. So hopefully you can see this. So this shows, it's shorthand for us finance people. And it's for a variety of reasons. But if we want to judge the, not so much performance, but I guess the well-being necessarily of a given agency, we take a look. First thing is, how much cash do you have? Do we have enough cash to, get through 3 months or 6 months? And that's really the guideline is 6 months. Do you have enough cash to get through 6 months worth of expenses, normal expenses? So what I did was, I know, and we all know, hopefully, that over COVID, the government has put forth trillions of dollars in aid, and Greenfield is no different than anybody else. We've reached out and gotten what we need to. We've hired a grant writer to help us write grants to obtain that money, and you'll see some numbers and things like that a little bit later on. But at June 30th of 2018, which is the end of the fiscal year, the city had almost $21 million in the bank. And that, quite honestly, is a pretty good number. So whoever was doing the financial things before I got here in 2017, we're doing a pretty good job of maintaining that. Flash forward now 4 years, June 30th of 2022, we have in excess of 26 million. So by any measure, an increase of 6 million or, 20 some odd percent over 4 years, pretty good performance. Now I've got a couple of caveats to that. One of them is what I had just mentioned. The federal government has been very loose with the purse strings. And our take that they just sent us as of June 30th of 2022 was almost 2.1 million. So that was a gift. You know, we've got to spend it still, and it's still in our bank account because we haven't decided. Once this group of workshops is over, hopefully sometime in the beginning of November, we will have a discussion and a workshop on the ARPA money, because that's called ARPA, the American Rescue Plan Act, to figure out how we're going to spend that, not only 2 million, but this July, last month, we got another 2 million. So we will have $4.1 million to spend on one of many things. The city council will take into consideration what we discuss at the workshop in November, and we'll see what happens. But all I wanted to do was show you, this is, so in 2018, the general fund revenues were about between $8 and $9 million. Okay, and that means our expenses were about the same, right? What this shows us is, while the minimum standard for the federal government, or for the state government, is that the city have 6 months worth of cash available, we had in excess of 2 years worth of cash available. Pretty good cash position. So the city has not necessarily, since 2018, been in a bad cash position at all. We've got other issues, but having cash is not one of them. And we're in a better position now. And like I said, this is June of 2022. In July, we got another 2 million. So that number really now is about 28 million. 4 of it from the federal government. And we will have to plan on how we're going to spend that here pretty soon. Okay, people have asked about cannabis tax, and I'm just going to touch on it right now about we need to have it in a separate fund because we need to make sure where it's going. Okay, I get that. We can keep track of it without it being in a separate fund from the general fund. This is Greenfield Muni Code, and it's just like everybody else's Muni Code that has adopted cannabis industry. Cannabis business tax is enacted solely for general government purposes for the city and not for specific purposes. All of the proceeds from the tax imposed by this chapter shall be placed in the city's general fund and used for general government purposes. Doesn't mean we're going to spend it willy-nilly on whatever we please. Once again, go back to the appropriated budget. City council has 100% control over what gets spent and how it gets spent. Staff, we present to council what we want to spend, and if it goes along with the guidelines of what the council wants, then they approve it. Where they want to change it, they change it. It's never a perfect picture. We're constantly going, Councilmember White knows, we constantly go back, ask for more money, ask for this to be done, ask for that to be done. The budget is a plan, and it's a mandated plan, and it's fully appropriated, which means we can't do anything without it. So it's an important document. Cannabis has to be in the general fund, but it's okay. If we want to keep track of how we're spending it, we can. But just know, like all the money that goes into personal accounts everywhere, you spend it for what you need to spend it on. We're going to go over a bunch of numbers. Like I said, I put all the numbers together for revenues and expenses for the last 6 years in these spreadsheets, and they're available to anybody who wants them. It's all public knowledge. It's all public information. Just let me know. Send me an email, pwood@ci.greenfield.ca.us. It's on our website, and we'll be happy to give you the spreadsheets. So let me go to those numbers now. Okay, just so you know. Oh, stop sharing. Share again. Sweet. Okay. So this is what I did. I didn't do an analysis of everything in our financial system. I touched on this before. I'll touch on it again briefly, just to remind everybody. The rules for how we set up different funds and why we set them up is that if there is a restriction on them, like grants is a great example. Specifically, we get gas tax money. Every time you go and fill up your car with gas, a lot of the money that you pay per gallon is taxes. Those taxes make their way to the state, to the county, and to the cities. Every month, we get a check or a wire from the city for 4 different gas taxes. Those taxes cannot be spent on anything except roads, streets, things like that. They are in a separate fund. They're actually they're just in one fund, all 4 of them, because the requirements for what they can be spent on are the same. So that's where we get a bulk of the money that we spend on roads and streets. Anything that we get that we can't, that isn't restricted, by definition goes into the general fund, or if it's mandated, like it is for cannabis, goes into the general fund, goes there. The general fund is by far the largest and definitely the most discretionary fund that we spend from. And you'll see the numbers. You'll see them right now. First thing I want to show you is this spreadsheet real quick. I'm just showing you that this is our chart of accounts. This is everywhere where we post everything. Okay, so we've got planning deposits. These are all of our assets, our liabilities. We have our fund balance. Here's our revenues and a whole bunch of expenditures. You see there's numbers, like there's some of them, there's not too many right there. But we post to many, many places. Most of this is because you've got repeated expenses, and this is done by department. So you've got you got 8, 9, 10 departments. They're all showing up there in here, okay? And then, like I said, Fund 100 is our general fund in general. Fund 102 is our fire department, but really, technically, it's no different than any other department. We just wanted to look at it separately. It is a part of the general fund. Fund 105, once again, which is community outreach, which we just started a little over a year ago. We wanted to see how much money we were spending over there, so we set up a fund, but it really is a general fund. Fund 102, 105, and 220. Our fund number 220 is our sales and use tax fund. Sales and use tax, even though it's been voted on and reapproved while I've been here, was, I think, properly, and someone had their thinking cap on, was actually set up in a separate fund, even though it didn't need to be, right? So what they did was, because the measure that was posed to the public said, we need police, public safety, we need recreation, and we need code enforcement. That's what we need. We want to pass these sales tax provisions. It never said it had to be spent on that. It actually can be spent on anything. But what we did was we said, no, you know what? We're going to go back and we're going to show that, in fact, we're going to keep track of everything and make sure that the only thing we spend it on is public safety, code enforcement, and animal control, and recreation. So all of the records from then, which predates me being here, to now, and it will continue in the future, will show that those monies are absolutely being spent on the things that the people actually voted for. Not that it's being sucked into the general fund and the big vortex bringing it down and gets spent on whatever we want it to be spent on. And the actual numbers will surprise you. Hopefully, what you see in the public, like what the police department's doing, especially in the last 6 months or so, with all the enforcement things going on, that's a part of what these taxes are for. And I think it's hitting the nail on the head. Also, recreation programs, which you'll see. I think it's the next workshop is going to, no, outreach, public outreach. And then the next one, next Thursday is going to be on recreation. You'll see exactly the programs that they're putting forward. And it's most of it, because we didn't have a recreation department until it was happening right as I got here when I was finance director. But it was a really good move forward. So anyway, as I move down
Real
here,
quick on that, it's VW or whatever it is now.
yeah,
Year over year, that's increasing. Is it?
yeah, I'll show you the numbers.
increasing exponentially because of the new businesses, and does sales tax from the dispensary go into that as well?
No.
No.
No, because that's not Measure B or W. That's just our general regular sales tax. It goes to the same place all the other sales tax goes, which is in the general fund. So I'll show you those numbers. I've got them separated out. At any rate, so I've shown you all of those. I'm going to show you the next one, which is just the revenue. And this hopefully is going to be the fun part. Oh, sweet. Okay, so that works. All right, so I'm going to go to the top here. These are 6 years of all of our revenues broken down by category. I'm going to see if I can actually make it a little bit bigger for now so you can actually see the numbers. I'm going to take the stuff on the right-hand side. Just a little bigger. Oh, okay, too big. All right. Okay, so here's 6 years worth of revenues. What I've done is things that I think are at least modestly interesting. I put little yellow dots next to it. Because to me, they mean something as a finance professional. I'm going to start with these first. Can you see that? Okay, good. Ed, can you move the whatever that is? Perfect. Okay, so these 4 items, property tax, basically what it is. And you can see, really the one you want to look at is this top one, which is our regular secured. This is the property taxes you pay on your house. From over the past 6 years, it's gone from 326,000 to 447. Doesn't seem, so basically that's like 100,000. It's about 30% increase over 6 years, or 5 to 6% per year. That doesn't seem like, that doesn't like jive with the value the properties have gone up over 6 years. That's right, it hasn't. 1978, Prop 13, Jarvis Dam, put a cap on how much the state and counties, really, the counties can actually increase property taxes unless that property is sold to somebody else, then it gets revalued. So you'll see this, it's more than the 1-ish% that the Prop 13 allows, because you've got a number of sales that bump up the rates, but it's not this crazy ramp that we've kind of been on housing. So that's interesting. The first one is that I've got the yellow box on is VLF in lieu, which is a vehicle license fee. That comes from the state. It's really based on population. But what it means is, so it's gone up from 1.4 to 2.0. That's not a bit, it's a big number, right? And that's based on vehicle license fees. So automobiles are getting more expensive. They get more expensive as the interest rates stay low, right? Everything gets more expensive. The financing doesn't get more expensive, but the actual items get more expensive. And there's more vehicles on the road. So that number's going up. Looks like, let me just go over here. That's a 45% increase in that tax over 6 years. That's big. And it accounts for an increase in revenues of over 600,000 over that over the number 6 years ago. So if you're looking at what I look at the total amount of revenues that we had in 2016-17 was about 8.8 million in the general fund. When we get to the bottom, well, you know what? I'm going to do a cheat right now. I'll show you what it is. Oops. Our revenues, here's the 8.8 in 16-17, went up to a little over 10 million. This is our general fund revenues in 17-18, 13.5 in 18-19, stagnated there, about 13.3. In 2021, now the audit is underway for 2021, and it's an annual event. The outside accountants come in and make sure you've done everything right. 16.5. Part of that is the 2 million from the feds, the ARPA money. We put it into this year because that's where the auditors told us we needed to put it. So if you took that 2 million out, our real functional revenues were about 14, right? And then this past year, once again, audit hasn't yet been done, and that includes that second $2 million. But our revenues are up. You know, so take 2 million out of the 18 million down here. And that means our functional revenues are around 16 million a year. So over the course of 6 years, we've gone from 8.8 million to 16.5 million in revenues. Wow. What? Why? Right? We want to know why. There's a variety of answers there, and that's what we're going to look at right now. We're going to go back up here, and that's why I have these numbers over on the side. We want to see why is it that our revenues are so much bigger. Well, so out of the, I think it's 6.031 increase. I'm sorry, wrong one. 9.6 million increase over 6 years. Why do we have that? Well, a lot of it you'll see here. 600,000 is in VLF. Why is that? We just talked about it. More cars, lower financing rates, which will drive the prices up because everyone can afford more car if your interest rates that you're paying on your loan are low, right? It's like everything. Same as your house. Okay. Then there's this one, sales tax. Okay, so Ms. Garcia was talking about where are we with sales tax. So this is not our VLF. I'm sorry, this is not our measures V and W. This is our regular, what's referred to as Bradley-Burns 1% income tax. Over 6 years, we've had an increase of about 16%. Now that only accounts for like 176,000 because this number is not huge. But once again, while we're talking about sales tax, let's go down and look at the other sales tax. So 220, this group right here. Where's sales tax? All right, so we are making, good. So this measure VX, which is the one that actually is, I believe that's the one that we actually have a 5, do we do 5 or 6 years? Whatever, it's got a deadline that we will either need to let expire or we need to renew it again. The last time we renewed it, I believe, for 5 or 6 years. This measure W goes in perpetuity. And so we don't have to renew that one. The numbers, this number here in 16-17 is really low compared to this. So one of them, the X, VX is a 1%. So it's an additional amount of about the same amount as our Bradley-Burns, the 1% that everybody gets before any kind of voter approved measures. And the second one is 0.75%. So those are these amounts here. And in 16-17, we had about 1.2 million in revenues, and we're up to 1.457. So that's we can figure that out if we want to. If we do yeah, 18.6% increase. And this one is 204%, but that's because we didn't start that until late in 16-17. So that number there is it's actually pretty steady. If you look at full years, 1.1 million in 17-18, 1.056 in 18-19, 1.007 in 19-20. So these are COVID years, started in March of 2019. It's rebounding in 2021, and yeah, caveat on 21-22, there is one more month left in the accrual. We don't get the money right at the end of the month because the state's gotta figure it all out. So we get it 2 months in 2.5 months in arrears. So we still have to record later on this month, probably next week, we will actually get our June final for June 2022, and we'll add it to this. It will be probably 300,000 to 400,000 total. So we will amazingly probably hit our budgets or be really close. And it'll also make these little lines as far as the 21-22 year kind of make them more like they're supposed to be. So I'm gonna go, so that's the sales tax thing. 15% over 6 years, not bad. Whoops. Oh. All right, let's go down and look at the big one. Here's the big one right here, cannabis tax. So we've been collecting cannabis tax since 2017-18. We had one company paid us, and it was a partial year. They paid us $371,000, but it was in accordance with their agreement. And then in 18-19, we collected 1.3 million. In 19-20, we collected 1.8 million. In 2021, we collected about 1.3. I'm thinking, well, why is that going down? Part of the reason is our audit's not over yet, and we need to, this is part of the answer. We do need to accrue some monies into this year. Will it be 500,000? I'm not sure. I would tend to think not. But it will be over 1.6. And then so far this year, which again hasn't been audited, it's at 1.8. I think there's some accrual, moving of money from one year to the next. So I think part of this 1.8 probably should go back to the 1.297, because great example is this money's due quarterly. So their debt is due June 30th and it's payable by July 31st. So June 30th is the end of the fiscal year. So if we didn't accrue it properly for the July payment, it wouldn't be in the right year. And I can guarantee you we have not yet done the accruals for 21-22 yet, because that year just ended. So some of this 1.8 will probably belong in the 2021, and anything that we have that we've gotten this year will need to be accrued back into 21-22. Anyway, that's a big number. It's about 400% increase. Yeah, well, this is, once again, it's a partial year there, but we can see about 1.3 up to about 1.8. I believe that we will be budgeting around 1.8, 1.9. The general trend is for the cannabis companies to be asking for relief related to taxes, which this is a big issue. And this might be I don't know, do we want to talk about cannabis at a workshop? We might want to. We don't have one scheduled, but it's a it's a big issue for a number of reasons. Obviously, cannabis, a lot of people don't like it. A lot of people do. It is legal. That's all good and well. It's a brand new industry in California. And everybody had big dreams about how much money it's going to come into Greenfield. You guys probably know those numbers better than I do. 40 million per year. Yeah, well, so this is more like it. Now we have these two guys behind us, Loud Pack, which is now State House, and Four Leaf, which is now something else. They are the largest privately owned. One is the largest privately owned cannabis company in California. The other is the largest publicly owned cannabis company in California. And those are state-of-the-art cannabis facilities. So they're not going anywhere. And we know that. And that helps our leverage. But we also want to make sure that you saw the numbers. It's $1.8 million-ish a year for a city that 6 years ago had 8.8 million in general fund revenues. Another 1.8 million pays for a lot of stuff. So what do we want to do? Do we want to keep them in business? And then it's a fine line. And you go one way or you go the other. Do we keep them in business and help them so that they can stay in business by lowering the tax rate? Or do we say, nope, the original plan was to bump it up, right? And that's still in the agreement. So we've got negotiations to do. Council's got some tough decisions to make. And that's the story on cannabis. So we have collected these amounts. I think it comes to about 6.6 million over 5+ years. Let's put it that way. And you can look at it one of many ways. Where did it go? Well, it's got to be put in the general fund. And I'm going to tell you, we just looked at cash, right? In 2018, we had 20 million in cash. In 2022, 4 years ago, we have 26 million in cash. So our coffers have gone up by $6 million. We've collected a little over $6 million in cannabis taxes. So if you want to look at it that way, it's all still there. I'm not gonna pretend that it's all still there, because we have a fire department. We've got some well-paid, everybody's getting paid a rate that makes sense for what they do. We've got all kinds of CIP projects out there, and all kinds of things going on. So we've got more money than we've had ever. The amount of money more than we've had 4 years ago mirrors the amount that's there. But then we've also got, some of this ARPA money. And as we'll hit on, geez, man, how long have I been talking? Yeah. We've got grant money coming in, and lots of it. So if I think cannabis is a large subject, and that if we wanted to, we could do a separate workshop on that. I would love to hear opinions about what you'd like to talk about. Okay. So I'll get down to my next yellow line, and this one is, none of them are as good as cannabis, but this is our utility user tax. And that is the amount of money that our utilities, we contract with utilities such as PG&E and water companies, as well as our garbage service, to come in and provide services for us, provide our electricity and gas. And they pay us what they refer to as a franchise fee. We don't let anybody else come in to do that. And so they pay us what's referred to as a franchise fee. The amount that they pay us is the same amount in 16, 17 as they pay us now. So any increase that you see, and you do see it rising, that's a 49% increase over 6 years, is solely due to the amount of services that are being provided to us. So why is that interesting? It's interesting because our population has gone up officially by how much in the last 6 years, let's just say it's 10 years. It went up a couple of thousand people out of, let's just say 20,000, let's say 10%. Yet the amount of money we're collecting on user utility taxes has gone up 50%. So we're using more services. In fact, 5 times more services than our population would suggest. So just interesting. Counts for, of that 9 million increase over 6 years, 141,000. Oops, all right. Let's go down. You can look at this at your own leisure. Here's another one. Construction permits. Wow. So I mentioned before that we got stung back in 2000. We got stung in 2008 by not having collected permit fees and other fees that were due. We got a couple of people, in fact, they're in this room, that decided that probably wasn't the greatest idea to continue that because it cost the city millions. 700,000 twice, about. So we decided, nope, it's not going to happen anymore. And 149,000, you know, granted, 16, 17, there was building going on. It's a lot more now than it's ever been, I think. I mean, I don't know, ever. Certainly in the last 5 years since I've been here. But we're collecting this stuff. 150,000, 110,000, 245, 270, 469 in 2021, and almost $1 million last year. 546% increase. That's over 5 times. And that's about 800,000 of that 9 million that it's gone up over in 6 years. That is, let's see, is this the same thing, only different? No, this is, once again, when you talk about user utility taxes and it's going up 5 times the amount of what our population supposedly went up. Here's our garbage fee revenue. That too has gone up 31% when we know, well, this is based on the number of houses, not even based on the number of people, right? So the number of houses hasn't increased 30%, yet the amount of revenue we get, and it's the same agreement that we had 6 years ago. So nothing's changed as far as the rate that we get. So just interesting things. What it might mean is more people are using more services, right? The one that goes along with that is the solid waste surcharge revenue. So these things are on your bills. This is where they get, so when you look at that, whatever, $5, $2, $3, whatever it is on your utility bills, this is where it goes. It goes into 2 different categories, and they account for an increase of 31%-ish over 6 years. The 2 of them together is about $700,000 of that 9 million. Oops. Okay, part of this, so here's 700,000. We developed back in fiscal year 2021 when we started getting our money, and when they put out this, when the state of California, with money they got from the feds, decided they were going to start paying for rent for people who couldn't pay rent and couldn't pay the utilities. We decided, okay, we had a lot of those people, and they were going to give us basically as much money as we could handle. So we needed to hire somebody. We actually started the community outreach department, and we have a very capable young lady handling it. And she gave away $200,000 in 2021 and $714,000 last year. And I think this is all open until December of 2022. So we will also have some money here. That's $913,000 that we wrote checks for to get people, to get landlords paid, basically, and to get the utility companies paid, as well as the city of Greenfield. We provide water services and trash services. So we were on that list to get paid. So that's 714,000. That really, that's kind of like an in and out. We get reimbursed for it. So we actually spend it first, and then United Way, basically it comes from United Way, because they're handling, but that's a lot of money to pump into the local economy. That's a really good thing. So All right, moving down here. Got this other one. What are these? Zoning fees. So this goes along with our planning department. Once again, rezones, 43,000, 23,000. This is a kind of a hit and miss. This is not something that accrues necessarily by nature year over year. It's just whoever needs a zoning fee, a zoning change. 23,000, 43,000, 64. Then it went down to 17. This past year, $206,000. It's quite a bit of money just on rezones. Plan check fees. So we're into the meat and potatoes of doing things efficiently and effectively. What Paul and Gabe have done in planning is they've taken a look at, we haven't changed, we wanted to change some of the structure of the fees and charges, haven't though. They just decided we were going to follow all the rules and collect all the money. Having said that, overlay the fact that there is a lot of development going on. There's more development than ever. So that's part of it. But the other part is actually collecting the money. 88,000, 89,000, 107,000, 133, 224, 600,000. That's a $500,000 of the delta between 6 years ago and this year. And then the last one is something, you look in 16, 17, we didn't have a fire department, and we actually didn't have much of a plan check, a fire plan check fee. But Chief Langborg started that and said, hey, that's something that every city needs, is you need to go in and make sure that the fire, that everyone, every business, and every multi-unit dwelling needs to make sure that they're ready to take care of fires. And so every landlord and basically business needs to pay to have their place inspected. $6,000 we made that first year in 17, 18, up to 8.5 to 46,000, 136,000, 336,000. There's so much development going on. And so every time one of those houses over there at the Nino development on Elm gets checked, got to check it, got to make sure that all the, all the smoke alarms are there, carbon monoxide. So, and if Chief Langborg hadn't started that, where has it been? Well, it's here now, so that's good. That's 336,000. These are smaller amounts. So this is our functional revenue of Fund 100. Then we go into 102, which is the fire department. They're making, so these are the amounts that the fire department, Ms. Garcia asked about the assessment. So that's referred to as Measure C, all that money. So sorry. So the fire district gets property taxes, and that is the top line. You can see that, right? Okay, good. Fire department, the first taxes that we got were in 1819. And at the same time, this Measure C, this assessment passed by the voters. So they're generating around, 780,000, 790,000, 800,000, 834. Those are going up incrementally a little bit each year. This amount, it should be around 300 and some odd thousand. It will be, once again, it's the accrual that we get in July has to be accrued back to June, so that amount will be better. But the point is yes, they bring in around 1.1 million just in property taxes and Measure C assessments. They also sell some of their equipment. They got old jackets, they got old hoses. They either donate or they sell to other people. They make a couple $1,000 anyway. Okay, then we get into, we kind of went over this already, the sales tax. And that is, I don't have numbers there, but this is basically the end of it. Most of that, along with, so that basically makes up the nine or so million. It really isn't 9 million. It's about 7 million. But that's really where it is. So that's That's your general fund revenues. And, you know, I do intend, I'll go over the expenses, but once again, I've delineated everything in the general fund, and then I summarize it at the end. You can take a look at all the details if you want. I'll show it to you, but I'm really going to show you the summary by department of where we are, because you know, we've had issues or people concerned about how much the police department's spending. Don't forget, and I'll say this all day, and I love to have arguments about it if people want to argue about it. Our number one priority in Greenfield is keeping the public safe. We have a great police department. We have a great fire department, and they work together with the ambulance service and public works, because there's a part of public works that is public safety too. They're out there all the time. If you have a water line break, if there's a fire someplace, they're out there as well, making sure that the traffic can go on the way it's supposed to go on. If the water's turned off at a fire hydrant that got run into, what have you. So we want to make sure we have the best that's available. We want a first-in-class police department. We want a first-in-class fire and EMS, and we want first-in-class infrastructure and the people to run it. So when you look at these numbers, you may or may not be surprised. Oops. 175, I think. What's any question? Oh. Yes, ma'am. Yeah. Yes.
And if so, who would be the ideal person to contact, or more, I
Excellent.
guess more just kind of to see a number and
Yes.
how to go about that?
Yeah, absolutely. Yes, the question was for those on Zoom, is there a fund specifically set up for, I'm going to call it community outreach,
Okay.
because that's exactly what it is. It is the fund, it's Fund 105. We set it up last year. We really set it up for this grant, this rent and utility grant thing, but we also, the person that it runs that department, her name is Fabiola Lopez, F Lopez at ci.greenfield.ca.us. And she does a great job. And if there are any, and this is for everyone, if there are any nonprofit organizations that are going to have community events and would like the city to participate in, come and ask us. Because there's a chance that city wants to be a sponsor if we're helping people and we're being, making sure that we're being non-discriminatory and we're, checking all the boxes related with what we can do with public money. So Fabiola Lopez, yes, we do. She will be handling a number of the citywide events like Harvest Festival. I mean, she'll just head it up. We have a number of people doing that. And Halloween, I think, is one of the ones she's doing. Otherwise, the other ones are for now being handled by the recreation department. So yeah, absolutely. And, council's we set this up very deliberately. We never had it before. Honestly, I've never heard of it. I know that there are departments within cities that handle those things. Ours is community outreach. It also handles the food bank coordination and coordinating all the volunteers to do city work. Like if there's going to be park cleanups that we're going to sponsor, she would handle all that. So she's very dedicated to that. Yes.
Is by chance, do you know if there's like an application process where this something online that we could just kind of pull up and then submit, or is it a one-on-one conversation prior to?
It's too new. I think it's a one-on-one for now.
Okay.
But love the idea. So I'll suggest it to Fabiola, pretend it's my idea, and we'll go from there. Thank you. Any other hands up? Ed, can you see any hands up? Oh, there we go. All right. Not right now. Okay, very good. All right, so here is, I think, what we can do Very good. All right. So here is a here's an overview or a summary by department. And I just went in order. And so it may not be the order that you're looking for, but it's the amount of expenses. And let me just show you the top of this. This rolls up to all of these expenses by department, by general fund category. So if you want to copy this, like this first one, this is all the expenses for Department 101, which is the city council. You can see they haven't had a raise. In fact, it looks like they went from $23,000 all in, which includes their salary and all the taxes that we pay. They've gone from 23,000 to 22,000 over the past 6 years. Thank you, City Council. We appreciate your contribution. But I've got them subtotaled at the end of each department. So we've done some things. If you take a look at this, they have a line item called general community funding. And that takes care of some of this public outreach. What I was trying to do was they have this line item. City manager has a line item. I don't know why, because everything that I do, I run through council. So what I tried to do is take all these numbers, throw them into community outreach and just say, we're handling it in this one place. And if there's a nonprofit that wants money, go through them, take it to council, and we'll be done with it. So anyway, so we've got all these things. I'm just gonna go down to the summary again. Once again, all these details, you can email me. I will gladly send them to you. City Council. I got more yellow here per line just because a lot of the stuff is important. City Council, I don't have a yellow dot by, but the next one, which is community outreach. Yep, there's the $1 million in rent and utility payments basically for that year. We did have a little bit before that. It also is including another very small grant that is being administered by community outreach. City manager, that's my department. It's gone down from 701,000 to 388,000. Part of that is because my salary, since I do finance department, I handle the finance department as well. We put some money of my salary over into the finance department. But then you'll also take a look and see that that also is down 181,000 over 6 years ago. Why? We're doing things better. We actually had somebody out for a long time that had a lot to do with it, but I don't expect it to stay down there. But in general, we're doing a much more efficient job. Civic Center facility that's taking care of this facility. It's a part of Public Works. Risk management, information technology, that's been rolled into other funds and they get paid out of different funds because they provide services that are internally focused, which means their work serves all the other departments. And so they've got their own line item budgets, but they're funded by different departments. So police department, got a lot of computers over there. We pay a big chunk of money to our internal service fund that's not in the general fund to have Ed, our man in the back there, take care of their computers. And then it's all over the place, whether it's here in City Hall, Public Works, Fire Station. City Attorney. So over 6 years, there's been some issues with the public with how much money we spend on our city attorney. One thing that you don't see when you look at these numbers is how much money and how many illegal issues that we've had to deal with over the years, people suing us for this, that, the other thing. I think there's either one or no outstanding lawsuits right now. We've had numerous 2, 3 suits in the past at a time, seemingly constantly. But our expenses have gone up, and you can see we get 260, 370, 503. 579. And it's come down 324 and 396. And it'll be 375, 400 this year as well, which is a little bit more. What we're trying to do is focus on risk reduction and actually reducing the risk of someone suing us. Because even though it's may cost a little bit more here, to get out of a lawsuit costs a lot more. So we'd rather avoid the lawsuit altogether. It doesn't mean settling. It means not having someone file a lawsuit by having good facts and a good attorney or two or three that will be there to help guide us through potentially sticky situation. City clerk, basically static at 180 something. Finance, like I said, that's gone down 182,000. Don't expect it to stay down there because we now have hired a senior accountant who's doing a great job. Part of these, when you see expenses go down, many times it's because of lack of staff. Staff traditionally, just as a rule of thumb, 80% of what a city spends that's not capital improvements like streets and roads and those things, 80% is personnel related. So 80% of almost all of these budgets, individual departments, is people. So when you don't have people, you can, and if you're getting by, and if you're providing the services that the council expects out of your people, you can save a goodly amount of money. Question? Yep. Let's take a look. Yeah, so here's, the top one is our the city council, 101. And we'll go down to 16 workforce workers comp, lodging services, meetings and conferences. So here is the money we've spent on city council to go to meetings and conferences. So in 16-17, it was $10,000, 17-18, about 19,000, and then 15,000, 4,000, 2,000, those are COVID years. And then it's gone up a little bit, right, to 5,600. So during COVID, wow, we discovered Zoom, right? And so there's a lot of conferences that are being held that way. We're starting to get back to actually going to conferences. But yeah, so those are their numbers for the past 6 years. Yes, they do. Not in the city council department. This is specifically city council department. So if you want to see what any other ones did, so this is one. Oh, it's not going to be, that's a different one. Let's go to police department. Okay. So here's so in the police department, we have multiple departments, like sub-departments or divisions. The first one here, division or department 201, is admin. So this is going to be the chief. This is going to be right, administrative, executive secretary, potentially captain. Yeah. Okay. So their spending there looks like it's just kind of drying up. But what isn't, and it's a good sign, because don't forget, our number four priority is to build a staff that's best in class. And so what I want to see is exactly what's happening here. Their training budget, while their meetings and conferences, which it's good for a lot of things, and it may be some training as well. But when I see other training going from $1,800, $3,100, $10,000, $67, $84, $11,000, that's what I want to see. Because it means they're going to a lot, or more people are going, or what have you. And everybody, the plan is everyone has a training program to get them where they want to go. Same thing in public works. If somebody is has one, water or wastewater certificate has a grade 1 and they want to get to grade 2, we want to do everything to teach them what they need for that certificate and encourage them to go. So this is what we want to see. We want to see more training. We want to see people get better at what they're doing. Yeah. So we did. Oh. Okay, so salary wise, yeah, for the 5 of them together, and this is just, what's that? What's one for one? Oh, for this one, last year we paid council $22,000, which included all of their, included all of the taxes. So take 22,000 divided by 5, it's about $4,000 a year. So that's, what is that? $400 to $500 a month? Gets a check for $400, $300, $400, $450, $450 a month. Does the mayor get one that's more? I think it's $100 more. So there, if you want to know how much anybody's making, there's a website. There's a website called Transparent California. You can find out what any public servant, which includes council members, makes, including everybody in this room that works for the city government. So if they really want to look it up and not just complain, hop on the internet. And yeah, council members, it's a labor of love, that's for sure. Yeah, and you get more phone calls probably than I do, and I get a lot of phone calls. So, yeah, I mean, all 5 of them together, I mean, it doesn't even count because there's a lot of things that you don't have control over in your budget. So I would just say 4,000 to 5,000 a month. I'm sorry, 4,000 to 5,000 a year. Sorry. So I'll go down here. I really don't know how interested anybody is in this. Maybe what I should do, there's a couple of line items because we had a couple of false starts. And this is raw data. I mean, I do summarize it and I put them in really cool colors, but this is right out of our accounting system. So if in fact there is something that somebody wants to talk about, I mean, people love to talk about the police department. So let's talk about them. They're here. We can talk about them, right? All right. Okay, so let's take a look at this. So we're saying here, this is this bottom line here. This is the amount of, not revenues, this is the amount of expenses total for the general fund for these 6 years. So, and you know what, let's look at them right now because I took the revenues that we just talked about at length. And I'm sorry, I am passionate about numbers. I love them. But these are the numbers we just talked about. These are the totals right here on the revenue line. And then right above it is the expenses. So when we talked about budgeting, we talked about a balanced budget. That means is you're spending as much as you bring in. Doesn't mean it balances to zero. That would be wonderful if it did, but it doesn't. Sometimes you have a surplus. Sometimes you have a deficit. And the surplus is nothing to worry about. It just means normally what it means is you didn't have, almost always, you didn't have full staffing for the year because we budget for full staffing as much as possible. And if you remember what I said, 80% of the budget is people. So if you aren't fully staffed, and that's a problem, I mean, it's great for the accountant because we're looking great. But if you don't have enough people cleaning the parks, you don't have enough people sweeping the streets, it's a problem with the public, right? So the point is if we, so the point is if we do have a surplus, it's normally because of people, but there could be a lot of other reasons. So if you look at 16, 17, we had 8.808 in revenues. We had 8.820 in expenses. That's balanced. 17, 18, kind of the same thing, only a different way. We had a small surplus of 15,000. It gets a little bit different here in 18, 19. We had about $1 million surplus. If you remember, this is when we started kicking in, collecting fees and getting cannabis taxes, right? The next one we had is a little bit smaller, 148,000. We can find out what that is. I don't know right offhand, but it was a little smaller, but it is a surplus. 2021, don't forget, 2021 is the year we got our first $2 million from ARPA, from the feds. So it shows us we have a $2.4 million surplus. Well, take 2 million away because we had to count it as revenue, but we haven't spent it yet. And it's not like, it is a part of our budget, but we're going to spend it later and it'll be, so it's really around a $400,000 surplus. That's a nice little surplus. And then this year, 3.4, I'm sorry, this past year, 3.4 million. This has not been audited. We are not done adjusting it. And don't forget, we have $2 million in there as well. So the $2 million, the second $2 million from the federal money that came in. So if we took that out of here, we'd be at 1.4. But don't forget, we took a look at $900,000 in construction permits. That has something to do with this 1.4 million because we did not expect $900,000 in construction permits or zoning fees, right? So in the end, we can kind of, we come up with onesie twosies things that make it. So it's like, okay, I get it. So that's really where we are. And our expenses have basically doubled, kind of like our revenues have basically doubled. So the delta, if there is one, which we kind of tend to have surpluses, is the surpluses are going up little by little. Why? Well, because we have more revenue. We know we have the cannabis, right? We have more sales tax. We are trying to do what we can. You know, our number 4 thing, we want to hire the people that we hire and keep them. and train them. We want them to be here. We want them to live here if they can. We want them to be a part of the community, and because the accountant in me says, because it's expensive to hire people, and we like our friends. We like the people that we hire. So anyway, that's what I've got for numbers. Like I said, it's all available to you. I can show you the trial balance. I can send you everything. It's all actually in this one file. So if you want to look at it and you want me to go over any more detail, I could talk, obviously, I can talk about this all night and into tomorrow if you want me to, but that's it for the numbers. Anything on numbers now, because I've got a few more slides and then I want to open it up, holy smokes, to anybody who has any other questions. Ed, do we have anybody, their hands up? Oh, there's one. Laura. Oh, so I need to do this, right? Stop sharing. Laura. Okay, you're on, Laura. But we can't hear you. Okay, I see the little microphone thing going, but I don't hear. Laura, I don't know if you're speaking or not. Hey, if you're speaking and we just can't hear you, can you toggle your hand on and off?
Hello?
Oh,
Can you hear me?
I can hear, yep, we can hear you now.
Okay, quick question. I have a comment regarding when you say you guys prioritize yourselves on the officers. I had a couple situations with some of the officers in the past 2 years. About 3 weeks ago, I actually got my car crash, and however, the officers that showed up were not fully trained because they could not ticket the person without a license. So again, you guys are paying so much for the officers and they're not fully trained. After talking to Officer Mixer, he said that the officers that attended my call should have been already trained because they're over the year that they're supposed to be trained. Another one was about 2 years ago with code enforcements. There's a lot of violations with the code enforcements going on. I know you guys have hired new people, new staff. However, sometimes you see them around the animal control and the code enforcement all together. I don't think we need for them to be grabbing each other's hands to come to their duties. Again, we also have a lot of staff. I think you have to do a house cleaning because I see from your graph, there's a lot of overtime that is being paid. I think that we better probably need more people, more staff to do a better job in our community. That's all I have right now.
Well, thank you very much for that. I think it's, thank you for the public input. We're always looking for public input to see how we can make things better. The issue with the training on giving tickets, hey, we talked about that the next day and we realized that, hey, we actually weren't doing everything that we could possibly do. So if it wasn't for you and bringing that point up to everyone, it may still be we may still be in the same boat. Related to overtime, and I could go on for days about overtime. Overtime is indicative of a couple of things normally. In situations where it's not just officers, but it's also firefighters, anybody who's on an extended day where there are X number of people on duty and all you have generally is enough officers to do 2 shifts in police departments, example, or 3 shifts in the fire departments, example. Anytime one of them is sick, somebody has to backfill for them. And if they already have a 40-hour-a-day schedule, or it's more than that actually, sorry, 40-hour a week or whatever the schedule is, anything that they backfill is overtime. Just because we've decided, at least up to this point, that we don't want to hire more people just to be spares. Well, when you get to a certain point related to overtime, it becomes financially feasible to hire another officer, firefighter, whatever it is that can backfill to make sure that you're fully staffed for those public facing departments, if that makes sense. So overtime doesn't mean that you're being necessarily inefficient. It may mean that you're being very efficient by not having any spare officers getting paid for necessarily not working to backfill any of these. But whenever there is an injury, someone's out on vacation, because everybody gets vacation, somebody's out because they're sick or what have you, we have to pay somebody overtime to backfill that space. If you have any other, okay, all right. So is it an issue? Absolutely. Why? Because you're paying them time and a half. I mean, it's overtime, right? That's not the greatest solution. But what you need to do is once it gets to a certain point, we need to decide, well, should we hire another officer or two to take care of that so that we're paying at a regular rate? And it's a matter of where we are with that. So that's an annual budget review. And that time will be coming up here in the next probably 6 months for our next 2-year budget cycle. Okay, anything else about numbers? I actually like this. This is fun. Okay, then what I'm going to do is I'm going to go to the end of my presentation. Talk about, oh, shoot. I got to share again, don't I? I'm learning. All right, let's talk about some more good stuff. So we talked about how revenues are increasing. They've kind of doubled over the past 6 years. We talked about expenses. They've pretty much doubled over the past 6 years too. Is that weird? No, not so weird, especially when you take a look at what some of these people were making before we went through negotiations and we're trying to set up a staff that Greenfield and its residents can be proud of. But with COVID, it's given everybody a new opportunity to bring in more revenues and do more for your city. And what we've done over the past 2 or 3 years, ever since COVID really, is we've decided, wow, with the trillions of dollars being put into the system by the federal government, and knowing that that was going to trickle down at least through the state, probably through the counties to the cities and to nonprofits, that we would hire for $40,000 a year, he's an outside contractor, a person that has a team of people that can do 2 things: help us write grants, identify and write grants, and teach us to fish. Sorry, not fish, but how to write grants so that we aren't constantly asking someone else to be the grant writer. We can do it ourselves. And in fact, as this graphic shows, California Parks and Rec awarded us a grant for a new community center for $8.5 million. $8 million, does that ring a bell? Does that hit anybody's thing? Yeah, 6 years ago, that was our entire general fund budget. We got a grant for $8.5 million. And sorry, but I mean, I love our grant writers. We did this before they were hired. This was Jose Sanchez and Jesus Perez. They put this together, and they need to be commended for it. Now, the cost of the community center, unfortunately, isn't just $8.5 million. It's more like $13.5 million. So we will need to come up with $5 million to help pay for that. Can we do it? Yep, because it's recreation, and we can pay for some of it out of the general fund. We see we have some surpluses. We can pay for some of it out of our sales tax. Because remember, when we passed those sales tax measures, they said 3 things: public safety, code enforcement, animal control, and recreation. So we started the department. Some of the money that we've had there, because we have not spent it as fast as we've been getting it. And that's a that too is an issue, because I think when the people decided that they wanted to tax themselves, sales tax, to pay for these services, I don't think they meant that they wanted the city to save that money up, although that's kind of what was happening. Now, to staffs, and this was happening 5-6 years ago, but it isn't easy to spend $2 million on programs and hiring the right people. So we're getting to the point now where we are spending what we're bringing in, but we have a fund balance in excess of $1.5 million in that one fund, in Fund 220, which should go to public safety or animal control, recreation, that kind of stuff. So there's a pot that we can tap into for part of our $5 million. We also, Jose Perez and Jesus got an outdoor program grant for $700,000 for 3 years. There is no match. There is no additional expenses. They are already formulating what they're going to do with that money. $700,000, that's a lot of money. And that's for programs directly that impact the people. You wanted, I mean, hey, you passed a sales tax measure for that, and we make $1.2 million, $1.3 million a year on those sales taxes. There's $700,000 directly going into recreation. Also, community development got a $170,000 grant, planning grant for equipment, for programs, that kind of thing. And the police department teamed with Sun Street Center to get a state, what's referred to as a Cal VIP grant, in the amount of $461,000 for their Road to Success program, which is helping teens stay out of the gang lifestyle. And is there a match? Yeah, actually the match is greater than the grant. But guess what? We basically split the cost of getting a number of teens really, really good help to make sure that, or to do whatever we can to help them stay out of the gang lifestyle. Oops. Come on now. Oh, okay, so I got one more. Okay, I got to stop sharing. I'm going to get this before the day's over. Share. So I kind of said already that we weren't using our grant writers to write grants. And that's true to a point. Let me tell you, when they got started, they really got started. Bigger. So we just received, well, at the beginning of August, we received a regular monthly report. Make this bigger, on grant activity that they are working on. One thing I have not brought up, because I don't want to, this is not the water wastewater workshop. This is the finance. I told, in the history section, I told you, I think the biggest issue that Greenfield has had historically is didn't have any money. Okay, when you don't have money, you don't, many of the things you normally have to pay the people that are here, and they didn't have a lot of people, but who they had to pay. And when you don't have very much money, one of those things that goes by the wayside is regular maintenance on some things. You don't get your car fixed quite as often as you should. You don't fix the wastewater treatment plant quite as often as you should, making sure you're covering everything in the water supply. After decades of probably less than sufficient maintenance, we've got issues with our wastewater treatment plant, and it needs to be repaired / replaced. We are going through the repair process now. I believe we've earmarked over the next 3 or 4 years around $3 to $4 million to fix what we have. And then starting 5 years from now, we will be building a new wastewater treatment plant that is state of the art, and it's going to cost between 40 and $50 million, not 14 or 15, 40 to 50. It's a lot of money. But let's go back and revisit the amount of money that the feds, the trillions that they've spread around. One of the things that they realized, at least in putting that bill together, was that there's a lot of infrastructure, a lot of places that is decaying. And so they said, when we spread this money around, we're going to make grants available for infrastructure like water systems and wastewater systems so that you can repair them, replace them. If you look at, yeah, so we're working on a number of grants that are for just that. The Clean Water State Revolving Fund, we're looking at a $628,000 grant for planning, just the planning portion for the wastewater treatment plant. There's normally, you got to do, Gabe, help me out if you can, environmental studies, and then planning and design, right? And then construction happens after that. It's a long process, but we're working on getting 600,000 just for the planning design. And then this other one is not, Fabiola's looking at a tobacco grant to the tune of 150 to 175,000 to help us help enforce the enforcement of tobacco sales to minors and education on tobacco through the high school. So those are proposals that are in progress right now. The real good stuff is related to safe, safe streets. Safe streets and roads for all. That's the safe routes to schools. We're working with TAMC and the Department of Transportation for planning and for our transportation master plan. Urban and benefit drought relief grant are part of our water. Potential funding for a new well project. So that's not the wastewater plant. That's a well project. To build a new well is millions of dollars as well. So what we're doing is we've got some extra money. Yes. I mean, we just went through, we've got surplus, we got $6 to $8 million, but it's not anywhere near what we need to replace our existing infrastructure for water and wastewater. And as such, it just so happens there's a lot of grants out there, and the state water and wastewater people want us to get those grants so that we can help pay for this. The other options are taking out loans, issuing debt. We don't want to do that. Anybody seen interest rates lately? Yeah, we don't want to do that. And as the mayor said in his State of the City address last week, it could be rate hikes. And we may have to do rate hikes for utilities anyway, just because it might be a prerequisite for getting a grant. And if someone is going to give us a grant for $40 or $50 million, we will salute them and raise our rates. They're not going to be crazy, but it'll probably be 3 to 4 years of rate increases, maybe 10%-ish for 3 or 4 years. So it's not going to be small, but if they're going to give us tens of millions of dollars so that we haven't had a rate increase since 2016, I think. And we try to be very mindful that this is a big rate increases for utilities, a big deal. So those discussions are coming up. Urban and multi-benefit drought, we just talked about that. Wastewater consolidation program, potential funding. We also have requests from properties, mostly on the west side of town, that actually have fouled wells because there's too much nitrates or something in them, and that have asked to be joined onto the city's water system and wastewater system. And we've said we'd be happy to help them out if we can get someone else to pay for it. And so other people, there are nonprofits that do this and look for funding, and we are finding funding. There is funding out there for that. So we are happy to help. These properties are within our sphere of influence, and so it's kind of like what we do. Tire-derived aggregate grant program. I'm not sure what Jamie has planned for that, but that's all the ground up tires for probably recreation, and or I'm not sure what else we use that for, but That's potentially, we're tracking those opportunities. Submitted grants, we have an assistance to firefighters grant that's out there, $89,000. And then we would be required to match at 5%. Assistance to firefighters grants are another 80,000 to hopefully purchase a command vehicle. And once again, it's 5% match. So that's going to be 8,000 to be $1,300 or no, so we have a $4,000, right? That we would have to pay for a command vehicle potentially. Hazard mitigation grant, 1.2 million. That is to upgrade our generators. One thing we found out in the last few years is all of our buildings, if the electricity were to go down in a catastrophic event, there are few departments and portions of city buildings that would have power, others would not. And that's not acceptable, especially when one of those is our fire department. We need them to have an emergency generator. So we've applied for a $1.2 million grant to supply generators for all city buildings and water wells and lift stations. There is a match there. I can't remember exactly how much it is, but we would have to pony up some money, but it would be a lot less than what it would cost to do ourselves. Body worn camera program, 47,000, that's out there and it's self-explanatory. So I said this company, RPPG, does two things. They are helping us identify and write grants. That's what we just kind of detail. And they're helping us, teaching us to write grants ourselves. So we've had 2 training courses in almost 3. And the people involved are our department heads. There's activity report for July, everything that they did, and then all the people that are involved. It's basically our department heads and Fabiola Lopez, Ed Espinosa is working on information grants. And so this is probably, I'm going to pretend at least, this is the best $40,000 I've spent in a long time, because we are not only learning how to do things, but we're putting ourselves out there like never before to get more federal and state money. Any questions on grants? Oh, Laura, again, let's see if I can do this. Okay, Laura's got her hand up. Ed? Okay, go ahead, Laura. We cannot hear you. Laura, are you there? Laura, if you can hear me, can you put your hand on and off? Oh, she can hear me. Okay, so we can't hear you. Ed's working on it. Oh. Okay, so now, Laura, now we see you muted. Try it again. Microphone thing going up and down. All right. Okay, it's after 8 o'clock. Okay, Ed, you gonna keep working on Laura? No idea? All right, well, maybe Laura, do we have like a comments thing? Maybe she can like chat or something? Here's one of those. All right, well. Hey, here's somebody.
Okay. Quick question. I seen that we gotten a lot of grants. However, what is the time frame that you guys should use those grants? Because I seen on other city council meetings that we have a grant, but it gets sent to the next fiscal year. And now being at this time, if we keep pushing it and we try to use it now, material is going up. So it won't benefit us a whole lot trying to use a grant, which was given a couple years back, and now the price has doubled.
Yeah, great point. And it's a really good question. Yeah, so when you're talking about something like an $8.5 million grant for a community center, that's something that takes time and it takes years. They know that. We have a timeline set up with them, and we are generally following it. The first steps are to do an environmental report and design. And the same thing is with all these things, right? And we are in the but the very first thing we got to do is actually acquire the property that that we want to, where we want to put that. And so for a grant like that, it's you know, the timeline is in years. And of course, it takes a long time to actually construct it. I don't know how long it'll actually take to construct, but on the smaller ones, you know, I know that the community development's already spent the $170,000 that they've got. I know that the I don't know, the body worn cameras, that's still in process, right? So believe me, when we actually get notice that that we've received a grant or been awarded a grant, it hits the road pretty fast, and the people that want the body worn cameras or whatever it is get on the horn. In the case of and get it done. In the case of the generators, we still do not have a word yet, that one, whether we're going to be getting it or not. We've applied for it, but the point is when they do tell us that we've gotten it, and cross your fingers on that, we know exactly what we're getting and we know exactly where they're going. So it's going to be a matter of filling out a purchase order and making sure that the funding's there, and we get the reimbursement slip over to the, when I say slip, I mean packet of paperwork over to the granting people, and get it going. So you're absolutely right. We need this stuff now. It's just like we need a wastewater treatment plant right now too, but there's no way it's going to be built within the next 5 years. So what we have to do is fix what we have and spend a couple of $1 million on it, so that we actually can provide wastewater services for the next 5 years. So it's a very good point. But when you're talking amounts in the tens of thousands to hundreds of thousands to millions, we don't have so much that we, you know, don't celebrate and really try to get whatever it is that's going to help the public, get it out to the public as quickly as we possibly can. All right, anybody else? Yes, ma'am. Yeah. Right. Mm-hmm. Yeah. Yep. Yep. Mm-hmm. Absolutely. Yep. So here's the deal with parks money. So the question was, we got a lot of needs in our parks, And where does the money come from necessarily to help improve parks and make major changes as well as maintenance. So the question, the answer to that is, and you brought up, there's a series of funds called impact funds. And these are fees that are paid into the city by developers when their development will impact a number of things. One is parks, one is the streets, one is our water supply and our wastewater supply. What else? Traffic, I guess we said that. What is it? Yeah, fire, police, fire. So the tricky thing about the impact funds are they're paying into those impact funds because there are going to be more people. So those impact funds can't pay for probably more on Patriot Park, but it can pay for a new park. You can pay for new street things. It can pay for more police. It can pay for more fire. It can pay for more than what we have now because their building is adding more people that impacts. It's got to be balanced. So the answer on impact on making those improvements to Patriot Park, I don't think so. But the other point, sales tax, absolutely. That's what it's for. It's for public safety, code enforcement, and recreation. So yes, we can use that, as well as there is a part of the general fund, Fund 100, that is also recreation. So yeah, we can go from both of those. And the real thing is this, is we have had so many wants and needs. And normally, like even talking about, even if we had enough money to pay for all the street repairs, that, you know, to do it one time, we don't have the people to do it. And we couldn't shut down all the streets because that's what it would take to get everything done. So it kind of has to be done a certain part, you know, certain segments per year. But the idea of improvements like restrooms at the soccer field, that needs to be brought up during budget time. And it can be brought up anytime, but it's most appropriate at budget time because what we're supposed to be doing now is working the plan that we put together a year ago or whatever it was. So, so yeah, I mean, that's a great question. What we're doing with the baseball fields now is something that we budgeted for, but we didn't have a plan for. So working with the Little League, we have put together a plan that is working. It's working better than it's not working. It's not perfect, but we're getting somewhere. And I think that's a good sign. Okay. Okay, let's go to the rest of my slides. Oops, sorry. Wanted to share. Thank you. Thank you for coming. All right, done this grants. Okay, the future. So really, this workshop and every workshop, the other 12 workshops that are going to happen between now and the end of October is really all about being transparent, letting everybody know you've got a voice. We want to hear it. Nobody's got a monopoly on good ideas. And we need to hear concerns from everybody. Part of that, you can call that transparency. We're 100% transparent. All the numbers that I showed you tonight, I want to give to you if you want them. If you're a number cruncher, great. But to make it even easier on you, we are working with a company called ClearGov and to provide our books, and it'll probably be on a monthly basis. Once we close the month, we will post all of the transactions. Our entire accounting system is going to be online for anybody to look at, anybody to run reports. And it's not just the reports that I kind of shown you today where you've got summary expenses. If you want to take a look at who did they write checks to last week, who did they make deposits from last month, you can run all that stuff and do it to your heart's content. The point is, we got nothing to hide. We want everybody to feel comfortable that we're doing everything that we can. And if you've got a better idea, we want to know what it is because we want to do things better. We're also starting with the next budget cycle. This is kind of a pet project of mine. The GFOA, which is the Governmental Finance Officers Association. It's a national body that basically governs accounting rules. I know, I'm an accountant, what can I say? Has a budget certification of excellence. So they say, if you do all these things in your budget document, which I showed you before, this thing here, it's all about making it easy to read, making it easy to decipher, including all kinds of information. A lot of it is demographics. Lots of it's, cool pictures and graphs and charts and stuff that we don't necessarily have. We have a very basic budget that shows department by department, kind of like what we saw today, only some people have issues with the way it looks. That's fine. What we want to do is get into that program to certify our budget as being GFOA approved. And the same thing with financial statements. Our current financial statements are what is required for us to give to a variety of outside agencies. It's very bland. It's numbers, just like a financial statement normally is. So what we want to do is kind of dress it up a little bit and put some pictures in there, put some metrics related to not only staff performance, because that's our number 4 objective, but let's do our strategic plan and show what we accomplished in this year so that we can feel good about it. And so the public knows, oh, wow, they're walking the walk, right? And so, or walking the talk, whatever. They're doing what they said they were going to do, right? So, so that's some of the things that we're doing on the finance and budget side to kind of make things user friendly. And with that, I'm finally done. Thank you to everybody who's still here. I am more than impressed and a little bit humbled by your interest in this. So anybody have any additional questions? What would you like to see next time? I'll do another one. That's okay. You can stop now. Yeah, so that's it. That's it for me. Thank you very much. And thank you for those online. Francis and Laura, appreciate your contributions. And if you got any questions, you know what, call me. My number, you want to know my number? I'll tell you my number, 831-601-3081. Sorry, I should probably, if I can add that. Is that going on there? Sweet. 601-3081. Want to know anything about finances of the city or information or to meet with me? That's my phone number. Call me, leave a message. What have you. All right. All right. Thanks, everybody. Appreciate it.